The SBA just rewrote the rules for getting one of its loans, and one change quietly makes it harder to qualify. But there is also a rule that means a lack of collateral alone cannot get you denied. This video shows you exactly what you now need. The SBA just lowered the dollar amount where it starts demanding collateral by a huge margin. Loans that used to need no collateral at all now do, which catches a lot of borrowers off guard. So you want to know this before you apply. Did you know the SBA used to require collateral only on loans above $500,000? Did you know that line just dropped all the way down to $50,000? $500,000 down to $50,000. That is a tenfold drop in the amount where the SBA starts requiring you to pledge collateral, sometimes including your home. This came in the SBA's big rules overhaul. The threshold for requiring collateral fell from $500,000 to $50,000. So far more loans now need it. And it is part of a wider tightening that also brought back down payments and tougher underwriting. By the end of this video, you will know the 4 things that changed. The rule that protects you, even without enough collateral, and the 3 moves to still get approved. Stay to minute 4, for the part that means your assets alone will not sink your application. So here is what actually changed. The SBA rolled out a major update to how its loans are underwritten, and it tightened several things at once. The headline for borrowers is collateral, the point where a lender must start securing your loan, with assets dropped from $500,000 to $50,000. At the same time, the agency reinstated a down payment requirement for startups and business purchases and brought back tougher checks on a borrower's own resources and credit. The era of very loose, do what you want lending is over. The standards are stricter now. Read this part twice. Here is the part that matters most for you. Collateral is now expected on almost any loan above $50,000. If your business assets do not fully cover it, the lender can look to your personal real estate, like your home, if you have meaningful equity in it. Know that going in, so it is not a surprise at the closing table. Here are the 4 things that changed. 1. The collateral line dropped to $50,000. Above that amount, expect to pledge assets. Below it, the rules are lighter. 2. Small loans are still easier. On the smallest loans, generally $25,000 or less, the SBA does not require collateral at all, and lenders use their own policy up to $50,000. 3. Above $50,000, expect liens. Lenders take a lien on your business assets, and if those do not fully secure the loan, they can reach the equity in your personal real estate. 4. Underwriting got stricter overall. There is now a down payment expected for startups and acquisitions, and a closer look at your credit and your own available resources. Collateral is just one piece of a tighter picture. And here is the part that should make you stop the video. Even with all this tightening, there is a rule on your side. An SBA lender cannot deny your loan for one reason only, a lack of collateral. If you simply do not have enough assets to fully secure it, that by itself is not allowed to be the reason you get turned down. So if your business does not own a building or a pile of equipment, do not count yourself out. The lender takes whatever business assets you do have and then decides, based on the full picture, your cash flow, your credit, your experience. A shortfall in collateral is something you can overcome. Here is the move nobody teaches. That strictly secured standard, where the loan must be backed dollar for dollar, now only applies to the largest loans, generally above $500,000. Below that, lenders follow their own normal commercial collateral practices, so a strong borrower with a collateral gap can still absolutely get funded. Quick reset for anyone just jumping in. The SBA dropped its collateral threshold from $500,000 to $50,000 and tightened underwriting overall. But a lack of collateral alone cannot get you denied, and you can strengthen the rest of your application. Here is exactly what to do. Before I show you the 3 moves, let me give you the 1 rule that gets you approved under the new standards. Quick favor, if this is the first video that explained the new SBA rules clearly, hit that like button and drop a comment below. I read every single comment and reply personally. Share this with any business owner thinking about an SBA loan. And don't forget to subscribe. We put out several new videos every week. Drop a comment. Are you planning to apply for an SBA loan? Yes or no? I want to see how many of you this affects. Okay, here is exactly what to do. 3 moves. Move 1. Know exactly where the thresholds fall. Burn these numbers in. 25,000 or less. Generally no collateral required. Above 50,000, expect to pledge assets. Above 500,000, the loan must be fully secured. Knowing which tier you are in tells you what to expect before you ever apply. Watch this part carefully. Remember the rule. A lack of collateral by itself cannot be the sole reason you are denied. So your job is to make the rest of your application strong enough that the lender is comfortable, even if your assets fall short. That is where your real leverage is. Move 2. Strengthen what you can control. Collateral is mostly fixed, but your cash flow, your credit, and your books are not. A healthy ability to repay, a clean credit history, and organized financials can carry a loan that is not fully secured. Put your energy there, because that is what now makes or breaks approval. Most channels miss this. If you are buying a business or launching one, plan for a down payment. The new rules generally expect an equity injection of around 10% on startups and acquisitions. Show up expecting to put real money in, and you will not be blindsided halfway through the process. Move 3. Talk to an SBA lender before you apply. Bring your numbers to a lender early and ask 2 things. What collateral they will expect for your loan size, and whether your cash flow and credit are strong enough to cover any shortfall. Use the SBA Lender Match tool to find one, and go in informed instead of hopeful. Let me bring it all together. The SBA dropped its collateral threshold from 500,000 to 50,000, expects liens above that, and tightened underwriting with down payments and closer credit checks. But a lack of collateral alone cannot deny you, and the strict fully secured rule only hits the largest loans, the one rule that beats all of it. Collateral will not decide it by itself, so make your cash flow and credit strong enough to carry the loan. Know the thresholds, strengthen what you control, and plan for a down payment if you are starting or buying a business. Do that, and a collateral gap stops being the thing that ends your application. Here is what to do this week. Write down your loan size and which collateral tier it falls in, then pull your credit and last year's financials. Bring all of it to an SBA lender and ask exactly what you will need to qualify. One last thing before you click off. And there is a kind of business funding that can do real damage. One deal can freeze your bank account overnight, and lawmakers are only now starting to fight back. I break it down in the next video. If this video helped you, please give it a like and leave a comment. I read every comment and reply personally. Send this to any business owner eyeing an SBA loan, and make sure you subscribe, because we put out several new videos a week, all free. And the next video reveals how a merchant cash advance can freeze your business bank account overnight. We will uncover the hidden contract clauses that allow this to happen, and why many business owners never see it coming. You will also learn how new laws are starting to challenge these practices, and what it means for your money. Subscribe so you don't miss it. See you there.